What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 1st of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I'm here today to talk about the critical moment that Bitcoin is facing when it comes to its price action and how it could very well determine whether or not we are going to start finally trending higher after this 4-month-long consolidation, or if we've got much more pain to come, as we've been discussing. We got a lot to unpack here in today's video, whether it's Bitcoin or altcoins, the broader macrosphere, and the opportunities that we're watching in the market. So if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to start here by talking about the price action, guys, because we couldn't be at a more critical moment here for Bitcoin. I'm not trying to be melodramatic. This is, again, as we've been talking about, the battle for the moving averages. Essentially, the bull and bear tendencies that are going to play out here between these critical moving averages. As we got very close to the 200-day, it's no surprise that some buyers started to come in here in the same way we started to see some buy-side activity that was able to sustain prices from that 100-day moving average range. It's not always perfect. It doesn't always bounce right off of it. Sometimes we'll deviate slightly below, but generally speaking, these are psychological levels that a lot of traders are watching, and especially when we've been going through these consolidation ranges for such a long period of time. So the important thing I want to go ahead and discuss here today is what we're watching over here when it comes to the key timeframes. On a bigger time frame, really looking at the daily, the weekly chart here, the big thing we're watching for is how price interacts here with the 100-day moving average and the 21-day. After the last couple of days where we generally consolidated sideways, we actually got a nice close on the day of Sunday, up about 3%, and continued a little bit here in the early part of Monday. However, so far we have faded as we came in contact with those moving averages. That's not sending absolute alarm bells to me just yet. I'm not going to say that that is a guarantee that we're going down south and that we have no chance breaking through. I don't want to speak in absolutes here, but what I do want to say here is that so long as that continues to happen and you can't get a daily close, about 64K or 64,250 and really continue to set in enough of a trend to justify taking risk and showcasing that the bulls can clear through those moving averages and ascend higher, I have no reason to really want to take risk here. Again, I'm not here to try to trade up into the $72,000 range. I really only want to build substantial or sizable positions that we're going to clear through here and really go into 80, 90, or 100K in this cycle, right? And actually really confirm that we're going to really clear through the prior all-time highs of 2021 and really go through and get a nice sizable new all-time high that would give enough liquidity and valuation increase for altcoins to do something really special. When I take a look here at the shorter term time frames, and this is something that I think is important to keep in mind, our 4-hour time frame moving averages. We have EMAs, or exponential moving averages, for the 9 EMA, the 21 EMA, and the 50 EMA on the 4-hour time frame. I want to be very particular about that. We're not using the daily, we're not using the weekly, we're not using a general purpose one. We're using one that is focused on the 4-hour time frame. And the reason why I think this is imperative here, guys, is that while this breakout here is definitely a positive sign for the bulls, it's definitely a step in the right direction to formulating a long-term trend shift to the upside and getting away from this 4-month period of consolidation where there's really been no trend in the market. While that's a great thing, the question is, can it hold and start using these moving averages as support? Because while the break here is definitely good, price can break right back down. And it's imperative to understand here that this has not only happened back here in June, both here on June 10th and June 12th, but along with that as well, how significant these moving averages really are. Just take a look at how every single time we came in contact with that 50 EMA, generally speaking, we were getting shot down at that range. There's a reason I try to bring these moving averages to you guys. This isn't some kind of paid indicator or anything. It's something that's free out there. Of course, there are definitely really awesome and powerful indicators, some of which we use within the Dash Report group. But the main thing above all is that this is one of those tools that you guys can utilize that's readily available once you get it set up. I use a multi-time frame moving average tool within TradingView. It allows me to have multiple moving averages in one indicator. So even if you're on a free account, you can essentially set that up. It's really cool. It's a really easy to use indicator. You can basically find it here if you type in MTF, and basically you'll be looking for MTF custom moving averages. It's by Not Joe Business. Okay, little comedic satire here. But again, the main thing here above all is that if we do not hold in those moving averages, we have not confirmed any kind of significant trend. If we can hold on that and we can get back above this range here at 63,800, then you got my interest. And if we start really getting some daily closes above that 21-day moving average, right? And the key thing I want to emphasize, guys, is that, a lot of people feel like, oh, but Nick, if we wait around for that, if we wait for us to get above the 21-day or even to Bitcoin at 66,000 above the 100-day moving average, certainly we're going to be missing out on the altcoin trade setups that we're really interested in. We're not going to be able to capture them at a cheap discount. I would say that we've actually got tons of opportunity. Altcoins right now are at $233 billion. They were sitting at $371 billion back in March. So we are technically down right now in net percentage terms by about 36%. And to be even more transparent, when we sold our altcoin positions, market capitalization was essentially 33%. Basically, we're down 33% almost, roughly speaking, from when we got out from a lot of our altcoin positions. We made phenomenal returns in Q1. We locked in profits. We got out. We saw that the trend was waning here. But now, if we're starting to press up against that 21-day at a much lower range, and we've got the momentum to actually clear through and get a daily close, then we can start entering in positions here at around $240 billion, much lower range from where we're back at in that period of time. A lot of plays that have flushed down here. And I'll just go ahead and demonstrate this here, even if you take a look at total, right? Again, it's the battle of the moving averages right now. We turn off our drawings here, just focus on those moving averages, bounce right off the 200-day, facing up against that 21-day. But still, overall, at a big discount here, we're at 220, let's just kind of rough it off here, $2.25 trillion, right? At the prior highs, we were at 2.7 trillion. So again, you're talking about hundreds of millions of dollars of market cap that have been waned off here. And again, I'm not saying here that I think we're going up here. If I'm being honest with you guys, if I had to give my opinion, I think that this is likely going to get shot down to some extent or not be able to really solidify breaking through these moving averages. What used to be support, that 100-day moving average, has been starting to act as resistance. I only wonder here whether or not, just because we're at a slightly lower price range, we're going to get buyers. We certainly didn't get them when we were in the 100-day pocket back here and in fact broke through. So the question is, do we really have the buy side pressure to clear through? But above all, even though that's what I think is going to happen, it doesn't really matter. It matters whether or not we actually get to clear through the moving averages, because if we do that, then we've got our cue to potentially set up some trades. And if we don't get that, then we're waiting for lower lows. We're waiting for lower price levels. And again, I want to emphasize that you've got this kind of line up here between the lows. While I'm not saying you should always just go off of general trend lines, you can see that we had these lower levels each and every time. And I think it's lining up right here with this range we've talked about for multiple months, coming to test this little mid-range here from February of 2024, and Bitcoin was around $50,000. But again, just take a look here at some of the different setups in the market, right? Why we're not FOMOing. Render, right? One of the strongest DePIN and AI plays in the market, still sideways. Same price level it was at back on June 14th, and has generally been consolidating at this range. We wouldn't be getting it at the absolute lows, but it's still a lot cheaper from its prior highs at $13.7 per token. Right now, sitting at 7.6. So really solid discount here still. Stacks, along with that as well. Take a look, Stacks was at $3.80, right? Clear double top here, break on the 21-day. And where are we at right now? We're still getting shot down that 21-day moving average at $1.70. Wow. So still, at the moment, 50% down from its prior highs. Right? More than 50% here. And an inability to really clear that 21-day. I'm not FOMOing it. Right? I do like to see this. I like 50% discounts, but I know, historically speaking, this thing can go down a lot more than 50%. Last time it had a relative peak, it was at $1.30, went all the way down to 40 cents. That's more than a 50% correction. All right? And we can see back here, Stacks went from $2.70, setting a double top in the last cycle, all the way down to 21 cents. You do not want to be caught bag holding. The opportunity that you may miss waiting for the signals of momentum, waiting for the moving averages, is nothing compared to what you can't afford to lose by continuing to hold your positions. I want to make that very clear, guys. It's not about catching every single opportunity or getting the absolute lows or feeding your ego that like, oh, I'm going to time the market, I'm going to be the accumulator, I'm going to get in, I'm the accumulator, I'm getting in at the absolute lows, I am the smart money. Like, so many people, whether they realize it or not, they fall for that kind of trap. The thing is, a great trader at the end of the day, smart money, is going to wait for momentum. You're going to wait essentially to ride the wave of the big boys. And you want to make sure that that momentum, that liquidity is there, that there's the trend shift that essentially is going to allow for price to spread much higher and for you to be able to actually sell at a higher price from where current prices are, where you're entering, right? So again, still, inability to really establish a long-term trend. We see this as well with Fetch, another great play here that again had a very strong rebound out of its lows. It went from $1.10 in a matter of like 48 hours, 72 hours, went up to $1.75. Wow. And it continued to chop a little bit, still went up here to 186. And what do you know? We're right back down where we were on the 14th of June. Not too far away, basically in between the mid-range of the relative highs here from the rebound and the lows. So still not able to hold above that 21-day. Not a good look. There was some news as well that Coinbase may not be taking on to the new ASI token merger between Fetch and Ocean. And outside of this, as well, Singularity Net. Those are the three big AI projects or big data projects that have decided to merge together. So that might put a little bit of a wrench here in Fetch's performance. I don't know if that's really going to impact it. They'll still trade FET token, which is claimable one-from-one, supposedly with ASI. But above all, the key point here, again, guys, without all the details, is a price action right now is just not really holding out. Doesn't mean that there can't be opportunity. Doesn't mean things can't change here in the next couple of days. But when they do, I'm going to be able to have the confirmation that momentum is clear through, that we're able to get above the 21-day, and I'll be happily building positions at 170 here on Fetch at a much greater discount, essentially 50% here from where it was at back here in March. I know I got momentum on my side. I got a great discount opportunity. That's the kind of stuff I look for. I got real confirmation that I should be taking risk, right? Along with that as well, Ordi, this has been one that some people have asked me about as well. Ordinals, I've been kind of showing more of a skepticism towards ordinals. I think the ordinal narrative has been a little bit disrupted, at least some of these classical ordinal collections due to runes and some of the other different developments that are going on in the market. But at the end of the day, guys, it's definitely not my domain of expertise. The big thing above all those is that when I take a look from a price action perspective, which is my expertise here, I can see very clearly that right now, you got lower highs and lower lows. You've got a real inability, again, to still get above that 21-day moving average. This, to me, looks like it's ready to crash much lower. And the last significant range of support is here at $19. That's another 50% correction. I'm not saying it has to go that low, but if I had to say whether or not it was more likely to go to 19 or 20 bucks or to go up here to 96 bucks at the prior highs, I would say, and bet my money here, that it's probably going to come back down to that range. Right? I don't really see much positive trend here right now in a lot of these plays at the moment. If you guys want to know what kind of altcoins that I'm trading, you guys can, of course, check out the Dash Report, our newsletter. We've got some different setups here. Some of the coins that we even mentioned in today's video are ones that are actually on our radar here within the Dash Report, but we talk about price levels we're watching for, good entry opportunities, where you could get that capitulative buy dip, where you have a good risk-reward setup versus where prices are now. But outside of this, well, we have some interesting things which I'll cover a little bit later on in regards to some of the opportunities we're watching in regards to equities, the broader macro sphere, and kind of where we see markets heading. I wanted to talk a little bit, though, about kind of a last talking point here when it comes to the altcoin space. You know, when I'm looking at these capitulation events and then the following days where you get some type of buy-side activity, you're seeing some kind of optimism, I'm looking for the past week price action. I want to see which plays are actually rebounding the best. A lot of people will want to still pick ones that are at a cheap discount. Again, people try to bottom cash. They want to get something down 50, 60%, and that's the only metric. And the bigger the discount, that's supposedly better for them. That's a really bad mindset, guys. And the reason I say that here is that while it's not bad to buy at a discount, at the same time, it is imperative that you buy into strength. You want to buy plays that are leading the market, that are rebounding their strongest during those capitulation events, and outside of that as well, have the ability to continue accelerating and are showing confidence out of that period of capitulation. In some cases, plays that are setting new all-time highs, right? So a great example of that, for example, if we just take a look at the ones who have done well over the last 7 days, right? You see meme coins like Brett, you see Bonk, you see Dog with Hat, and you see Mogcoin, right? Mogcoin here is actually right testing around all-time highs. So it's important and imperative here. You analyze that price action, you see which ones are rebounding the strongest out of that capitulation event in the markets. Because when it does come high time to start building altcoin positions, then we can start to bet on those plays that are winning out in the market, that are bringing in the most liquidity, bringing in the most attention. And I can guarantee you that throughout history, it is more likely than not that those plays are going to win out than trying to buy plays that are down like 70, 80, 90% and hoping that they're going to come up and start leading the market and really come back to their all-time highs. Most altcoins are not going to do that. So you need to go where the liquidity and the strength is and where the strong narratives are in the market, which is why, again, we're focusing on those key things: DePIN and AI, Bitcoin-related infrastructure, right? These are kind of the key things, and also meme coins as well, that I think are going to be the ones that really can win out here over the next few months. Outside of that as well, it's also important as well to have kind of that early stage exposure to new and exciting projects in the space, to catch plays that are focused on new emerging ecosystems like the Base Network or Solana. Having ecosystem projects and getting early stage access to these projects in these exciting ecosystems that are hot right now in the market are definitely where I believe the focus should be for a lot of participants in the market. And it used to not be that you could get access to early stage projects, but through our partner Angel Block here on this channel, which we've worked with for the last couple of years, known Alex and the team for a long time. I love the vision of what they're doing and what they've done for fundraising in the crypto space. We can see that Angel Block is closing out rounds time after time again. They just had a successful raise closing on July 2nd. Right, now, essentially July 2nd here is basically going to be in the day, but they actually already closed out the round. They already filled it out. They filled out the $50,000 ticket here for a successful raise. They also had the second round that they did for Lingo, the community round that closed out. $50,000 raise. They had Delta Prime, nearly $140,000 raised in just a matter of a few days, and a whole range of other projects that have raised successfully through the platform. Angel Block has really been on a tear over the past few months, and I have no doubt there's a good reason why people are filling in these rounds. These are exciting projects. They're focused in emerging ecosystems and narratives. So I think it's important that you not only keep an eye on these different projects that are raising through Angel Block to see whether or not they're of interest to you. I'm not here to tell you guys you need to go out and buy them, right? For some people, early stage investments aren't their bag. They'd rather trade on secondary markets, and that's fine. But if you guys are interested in finding these early stage projects before the crowd gets to them and being able to get at them a much more favorable valuation, usually from when they list on centralized exchanges, right, and people are really starting to talk about them, then you can definitely check out some of these projects on here. I know Alex and the team is focused on constantly bringing in quality. And I think outside of that as well, it's imperative to learn about how Thole, native token, plays a role within the broader ecosystem. So if you guys want to learn more about that, there's a section on angelblock.io that talks all about Thole. The biggest thing above all, the biggest utility really, is the ability to get increased exposure and earlier stage access to any of the raises on the Angel Block platform. So essentially it serves as a core utility token, not to mention as well you get staking rewards with it. So definitely consider checking them out as well. But another thing as well that I wanted to discuss is some of the developments around Alp0. Again, Alp0 is one of our partners here in this channel, and they're one of my favorite L1 protocols in the crypto space, but no longer are they just an L1 protocol. They've also got a functional EVM L2 that they're developing at the moment, bringing to the market with real privacy technology. Anthony as well, one of the main team members from the marketing side, actually went out and did a really great Twitter thread summarizing some of the blog posts, the key points around some of the new announcements that came out around Alp0 ZKOS, the EVM L2, the upgrades to the WASM L1 or the native chain. So I definitely recommend you guys dive into this here. They talk about some really interesting details. The biggest thing above all is having a real EVM compatible L2 for the Alp0 ecosystem is going to be huge because it allows it to essentially be compatible with 70 to 80% of the broader ecosystem, and having built-in privacy is going to be a huge feature benefit here. That's going to allow for a lot of liquidity, a lot of developers and applications and use cases, and not to mention parties who originally couldn't interact with the broader crypto space due to GDPR or other privacy requirements for their users and data. They now will be able to interact with the broader range of technologies within the Alp0 ecosystem. This to me is a really big deal. So if you guys are interested, check out the links down below in the description, learn a little bit about them. These are things that I'm keeping on my radar at the moment from a fundamental basis, and I'll tell you, I wouldn't like them, I wouldn't be working with them, guys. They're cool projects, and I think they're definitely heading in the right direction when it comes to the more fundamental side of the crypto space. Last but not least, I wanted to go ahead and talk a little bit about the state of markets, broadly speaking, in equities and the broader macrosphere. I think right now, guys, there's an important set of things to be concerned about when it comes to equities. I think that overall, the weakness that we've been seeing in crypto right now, at least in the short term, is indicative of a broader risk-off sentiment that is starting to grow in all asset markets. And I think we're starting to see the cracks show when it comes to equities. If we just take a look here at the shorter term time frame, over the past half month, we weren't able to make any new accelerated moves in the S&P 500. We essentially had 2 weeks of sideways price action, essentially closed out in a bad way here on the final day here in the S&P 500 on Friday. And this is, again, coming up to test that line of resistance that I've emphasized to you guys, that is the 95-year-long line of ascending resistance and the upward channel for the S&P 500. I want to make it very clear here, guys. I'm not here to be doom and gloom. I'm not here to just try to dig up anything that's negative, right? At the end of the day, I'm generally a pragmatic optimist. I believe things go up and to the right. This channel, if you look at long term, as most people will tell you, the number goes up and to the right over the long term. So what's the big deal, right? Well, the big deal here is that if you're building positions now with cash, you may be entering at a really unfavorable time, whereas if you were to simply be patient, zoom out, and look for the kind of target ranges where you could accumulate big time during capitulation. We are in a very euphoric period of time. I would say in many ways, because we have not done the hard work on the monetary policy side, we have not ended the secular bull run that started since back here in 2009. And the general broader uptrend, the inability for us to retest towards this line of support, and the fact that the monetary supply expansion that we've seen over the last few years has not really properly been contracted when we analyze M2 or a whole range of other metrics, in many ways proves that we have not had that full-scale correction yet. A real 40-50% drawdown in markets. And I'm not here to say that that exactly needs to happen now. I'm not here to say that, we can't just pull back 15 or 20%, then retest against this channel high again. And I'm not even saying that there isn't a chance that we couldn't break through this line of resistance, but this is a 95-year trend line, and until we get a solid monthly close above that, until we get some kind of paradigm shift, I'm gonna go with the side of history here that's been playing out since the Roaring 20s, far before probably any of us were born, right? This is a very important trend line, and unfortunately most people are watching the hourly chart, they're watching the 5-minute, they're watching the daily. They're not coming and zooming out here to the quarterly chart and looking at the last near 100 years of price action here that we have to work with. So I just bring this to your attention, guys, because when I take a look here, we've got 3 companies that are sitting at the $3 trillion mark here or more. We've got Apple at a $3.2 trillion valuation, which has started to consolidate sideways again after breaking out of its resistance from back in July 2023. Nearly a year's worth of resistance snapped here with the announce of Apple Intelligence, but now we've started to see a fade here and inability to continue expanding. I want to see how it interacts with that 21-day moving average, because if it doesn't hold and continue accelerating, this could start to bleed big time and cause some serious pain for the indices, especially the NASDAQ and the S&P 500. Take a look at NVIDIA. NVIDIA right now, sitting in a market cap of $3 trillion, up there with the big guys, was the largest company for a brief moment of time here back in mid to late June. But still $3 trillion, just barely holding the buy thread on the 21-day moving average. Not a good look here, especially after the gapping crap that we saw here that was followed by 2 significant single-digit sell-side days here for NVIDIA. Microsoft as well, right? Sitting up there again with Apple, was the largest company in the world, $3.3 trillion. Last close of the day for the, last day of the week, sorry about that. The daily close for the week completely ate up the past weeks of gains, and essentially has left Microsoft flat for nearly 2 weeks now. So I think we're starting to see some signs here that this is ready to at a minimum cool down over the next couple of weeks, and that we might be getting here a temporary top here in equities. And that would make sense considering the amount of appreciation we've had here in the market, the exuberance around the AI narrative, and outside of that, the clear reality here, which is that equities are pressing up against a very important and significant line of resistance. That alone can be the catalyst for us to have a 10, 15%, 20% correction, if not something worse, especially if the dominoes start to come into effect. But above all, guys, we see it here as well in the FANG stocks. This is the biggest rally we've had in the FANG stocks from bottom to top, and one of the fastest recoveries, mind you, in the FANG stocks. Very similar to the percentage returns we saw in the past here, but the biggest one yet. We've been stalling since back here in April 2024. So coming up here in nearly 3 months here that we've been pushing sideways, right? So just keep that in mind here when you're going out and building those positions right now. Again, we like to buy into strength, right? But we love to buy those plays at a nice solid discount, right? The ones that are, again, proving the best returns here that are outpacing the market when you build custom ratios. And the same goes here with Bitcoin as well. Bitcoin has been the best performing asset, broadly speaking, if you compare it against the indices in 2023. There's no doubt about that. But the question is whether or not it's going to be able to repeat that in 2024. Is there that risk on sentiment? Is there really the inflows to continue justifying that price appreciation? And I have to tell you guys, if you look at the ETFs, the gauges that would be where we're looking for that liquidity, we're looking for those buyers, we're not seeing it. We're not seeing enough. And price action is telling us that. Continue to listen to those moving averages, listen to price, and it will guide you. It will make the job so much easier. The more you zoom out, the more it's going to be helpful for you. These are all important things to keep in mind, guys. And I understand everyone has their own trading journey. Everyone has their own risk reward profile, their own time frame for investing or trading. But above all, I'm here to bring you guys an honest opinion, something that I think could be quite relevant for anyone depending on your situation. And above all, is one that signifies that the greater times of the past may not be repeating as they did. And we're already seeing that through diminishing returns. We're seeing it through a really weak market when it comes to new narratives and fundamentals. Above all, price action is going to be your guide here. And the price is just not selling it for me yet. It's not looking that good. So that's it for today's video, everyone. If you all enjoyed it, consider dropping a like. It's a great way to support the channel. If you want to get my breakdown on the S&P 500, the broader sentiment of where equity markets are going, and along with that as well, some of the crypto trade setups that we're watching, what price levels we're looking for, you guys can always check out the Dash report down below. There's a link in the description. You guys can get 20% off if you sign up. It costs less than a cup of coffee a day. If you're a Starbucks addict, and in this case, costs even less than a cup of coffee per day, way less than a Starbucks cup of coffee with inflation nowadays. So if you guys want to support the channel, it's a great way to do that for less than $1 a day. But outside of that as well, you guys will get access to the Trade Alerts group, but along with that, you'll get access to the discussion group. You get access to a 20-page plus report each month. We're covering all of our different insights on the markets. And outside of that, we have our mid-month webinars where I do a Q&A section, and I'll answer you guys' questions as best as I possibly can, go through some of the things that we're watching in between the month, between each published newsletter. But that's it for today's video, everyone. If you want to check that out, the link will be down below in the description. Thank you all so much for tuning in as always. As always, consider dropping a like if you enjoyed the video, and I'll see you guys right back here next Monday. Take care, everyone.